Kunal, Nooresh, Sandip, Sabharwal, all of them are joining in on the show. Kunal, let me come to you first. What do you make of the recovery now?
I think it's a good recovery because it tries to mitigate the entire high risk and high, volatile market for yesterday. Because today it's more like a, the very similar kind of a market what we've seen for good part of this last 2,000, 2,500 points, a slow, gradual, and a steady uptrend. So I think except for the first half an hour, first 1 hour of a gap down and slight bit of volatility, I think other than that, it's been good comeback from large cap names. Many of the stocks have made a very good comeback. What also is very positive for the markets is the premiums for both the Nifty and the Bank Nifty still coming back to a 0.5% odd for both the indices. So I think for Bank Nifty is now around 160 points from being sub 100 points yesterday and even at the start. And for the Nifty, it's back again about the 88 to 90 marks from being 50, 55 points at one point of time. So that itself indicates some confidence which has come back into the markets today.
Okay, some confidence which has come back into the market, and that confidence has been led by Reliance Industries, which is one of your heavyweights which are moving on the upside. HDFC Bank, Kotak Bank, SBI. These are some of the other names. Nooresh, what do you make of the move on some of these private names? Because very divergent move today. HDFC, Kotak are in the green, while Axis and ICICI are firmly in the red.
So very interesting moves. The bounce has been on expected lines. We filled the gap around the 20,950 to 21,774 mark, and we've recovered. And more importantly, the recovery is led by the two heavyweights. So if you look at the recovery, HDFC Bank has made an interesting move because the stock has actually crossed the recent swing highs, which was there for the last few days. The Nifty has not. None of the other stocks in the banking names have really done that. So it's crossed the highs. It's crossed the highs of September also, where we saw a gap down from 1670 levels. So interesting recovery in HDFC Bank as well as in Reliance, wherein the momentum continues. So if the heavyweights support, that makes the markets more interesting, the Nifty more interesting as such. So overall, a short-term base being done, now get into a range of 21,000 to 21,600, and the bias remains positive.
Sandip, hi, afternoon. What is it that you made of this temporary blip that we saw yesterday and now the recovery thereof? Or was it really a temporary blip? Or do you think we've seen the peak in yesterday's high for this year?
This year it's very likely because it's just 7-8 days to go. So, but I think next year we'll surely make new highs. But in the near term, I would still be concerned because the froth in the market is too high, especially driven by very highly priced IPOs and the kind of listings they are getting and the valuations at which most of these companies are trading. I think the risk in the markets in the near term are high. We should still see the markets give up more gains.
What data point tells you that there is froth in the IPO market? Because, we were culling some traditional historical data, and 2021, you had more IPOs than what you've seen this year. The money raised as well was much higher. And, that's the time when you had your Nykaa, Paytm, PB Fintech, etc. list.
Yeah, so there were fewer companies and maybe larger size. Now there are smaller companies with valuations which are very, very high as compared to even any comparable listed company. So, for example, let's say this week's listing, something like a DOMS Industry. It's a stationary company growing long-term growth prospects of 5 to 10%, trading at 80 times earnings. These sort of valuations are not sustainable. And post-listing also the speculative activity is getting focused more and more into these stocks. So as it is, the overall small and mid-cap universe is richly valued. And on top of that, we have this. So I think there is risk in markets. And globally also, we've seen a significant run-ups in markets with huge amount, record flows into funds recent weeks. This typically indicates that some short-term top would be formed. It should give up, in my view, 5 to 7% from the top.
Sure. Point taken. Yeah, it's a bit intriguing the kind of valuations that company has gotten, and after the listing now, it seems like it's very frothy as far as DOMS is concerned. So that's one stock to watch out for. Even the other companies that are listed in this space, the likes of Flair Writing, we saw the numbers come by yesterday. Wasn't very impressive at all. There was hardly a 2 to 3% growth that we saw on the top line on a sequential basis. So one needs to be very watchful of what the valuations are on the table right now. But Sandip, what do you think explains the excitement on those traditional oil Indias of the world, ONGC of the world? Would you be looking at the oil and gas space at all?
Not really, because I think longer term it's a declining space where the pricing as well as volume for these companies will not grow much. So this is a phenomena which is part of the overall PSU re-rating, where huge amount of money, both from HNIs, retail investors, some funds, is flowing into PSUs. And that's why, and whenever some stocks become laggards, they attract more money. But I don't think there's any fundamental change per se.
There's also chatter in the market right now that you got to stay away from some of these election sensitives. I know, that sort of derails the entire PSU theory. But that said, for instance, the flip-flop that happened on the ethanol story right now. Many people are saying that, perhaps in the near term, at least, sugar is a done story. Would you identify such pockets? And would you really go by that prognosis that stay away from the election sensitives for now?
I would say more than election incentives, companies which purely depend on government incentives for their growth. For example, any of the companies which are relying on PLI incentives and doing low value manufacturing work, where the entire profit they are going to make is more or less going to come out of government incentives. Or for example, let's talk of the electric vehicle incentives also being discontinued from March. That can also cause significant disruption in companies operating in that space. Especially, I think there's new IPO of Ola Electric also planned. If it's coming before 31st March and the expiry is 31st March, then it's a very business model.
Okay, point taken. So those are some of the recommendations coming in with respect to what's happening to individual counters. But in terms of what is happening in the market, you have Inox India, the new listing, which continues to gain ground. You also have a couple of these diagnostic companies which are actually doing well in the trading session. Take a look at Metropolis Health. That's up by around 7%. You also have Dr. Lal Path Labs gaining almost 5% in the trading session. Nooresh, what would you recommend on the charts of some of these diagnostic companies?
It looks like a one-day move. Dr. Lal Path Labs has multiple resistances around the 2750, 2800 mark. That's been a year and a half of this range being not broken on the upside. So would be careful. Same is the case with Metropolis. We are seeing the spike due to some bit of the recent COVID buzz which is happening on the new strain, etc. But technically, we are at a very stiff resistance for both these names. I'll wait it out. Would have an avoid on the names.
Taken. Sandip, what's your view on the entire healthcare space? Because it's a reality that the hospital spends, etc., have been going higher. But in terms of diagnostics and hospitals, the valuations, would you still look at buying these names?
Not the diagnostics, because it's a very competitive space, growing at a very steady rate, and that also in high single digits. And valuations of many of these companies are still very high. So hospitals is a good space to be in, and there are few players. But then again, this run-up in stock prices has been so sharp, like Fortis at 400, Apollo Hospitals, they are 600, 5700. So I think at these prices, valuations are not attractive for new investors.
Right, okay. That's the take coming in from the diagnostics names. Metals actually is turning out to be quite the story today. You've got a Hindustan Copper, for instance, which is up about almost 11%. NMDC, which is holding up another 4.5% as we speak right now. And then, of course, sporadically, you've seen some decent moves in a sale as well off late. Sandip, any contra themes in the market? Metals, for instance, hasn't quite participated in the rally year to date.
Yes, metal performance has been quite disparate while Hindalco's continued to do well. Vedanta, due to its own issues, has underperformed. On the steel side, some of the smaller ones have done well, but the largest player, Tata Steel, hasn't done well. So I think some of these could see a comeback in 2024. The only thing which constrains the recovery is that the China continues to be bleak, and China is still 50-60% of consumption of most of the commodities. So to that extent, the upsides would be there, but could be limited.
Some of the metal names are also bouncing back, Kunal. Hindustan Copper, you have NMDC, Nalco, SAIL. They're all up anywhere between 4 to 10, 11%. Any trading idea here?
So Hindustan Copper and NMDC, both of them are looking attractive. In fact, Hindustan Copper is something which recommended few trading sessions back when the stock was at 190-92 levels for a target of 210 approximately. So it's surpassed those levels, but it's still looking very attractive. In fact, after yesterday's sell-off, I remember I think the stock had fallen down from 211 to 195, 196 yesterday. So it's not just recuperated the entire loss from yesterday, but even gained higher and made a fresh 52-week high for itself. So it looks attractive, and such are the kind of stocks which generally go into the second leg of uptrend after such kind of a sharp correction and then an immediate recovery. Even NMDC, I think, looks attractive. The stock has not yet crossed about the yesterday's high of, I think, around 197. But I would still believe that the entire theme of metals, commodities, etc., they are looking attractive. So would be betting on this space even from current levels.
So what are the targets on NMDC as well as Hindustan Copper now?
So NMDC, I'm very bullish on a long term, but if you ask me for a short term, I would probably place 220 as a target for NMDC.
Sandip, just to pick up on the point that you were making, that, ultimately consumption is the bedrock for economic growth. Now, I know it was said in the context of, the government needing to moderate personal income taxes as well as GST in the upcoming budget to spur high economic growth. But what's the best way to capture this uptick that you are seeing, this curve in consumption? Because looking at the current prices and the current valuations, it's only FMCG which hasn't really moved much, and that too is expensive.
Yeah, because FMCG continues to be expensive because volume growth has been so low that despite non-performance, because there is no volume growth, so the valuations remain the same, more or less. So that the volume growth has to revive. So one part of that will happen of its own as inflation remains at relatively lower levels from very high levels of the last few years. And as people's incomes go up, so that will create some recovery. The second part, like I was saying, was that we need tax incentive because tax rates are very high. The other way to play that is the consumer durable side. So consumer durable story is still better. So there, we have invested in Voltas at lower levels because I think that's one contrarian play on the consumer durable side. And the stocks like Havels, V-Guard, etc., can be considered on correct.
Okay, point taken. Sandeep, hold that thought. There's this exclusive news that we have for you back. Well, the recovery is getting a bit more exaggerated, at least when it comes to the banking index. Let's pull up that space and see what's the kind of recovery that we are seeing from the bottom of the day. That index is up a good 400 points, and the large part of that move is actually led by the private banking names. It's HDFC Bank, which is doing well. You also have a couple of other names from the private banking space which are actually doing okay. Reliance is also the heavyweight, which is helping the Nifty overall, and of course not the Bank Nifty. And SBI is the other one, which is adding almost 8 points. Sandeep, what will make you positive on the private banking names, or maybe the likes of ICICI, HDFC? What will make you add positions in those counters?
The outlook is good only for most of these large private sector banks. It's just that you need to wait for the correction to get over, because as the correction plays out, you'll also see these banks which form a large proportion of the index as well as in the holdings. Correct. So it's a matter of when to buy, not whether to buy. So I would say 5 to 7% lower in all of these banks should be good levels.
That's the, clear verdict that the fundamental here is not a problem. It's only a time-wise correction of sorts that we are seeing, and maybe anywhere between 5 to 7% lower is where you should start adding positions. But Kunal, what do you make of the moves on the banking names, and what are the levels that you're watching out for, let's say in HDFC, SBI, ICICI?
So, HDFC has clearly surpassed the previous resistance. In fact, we were discussing this on the chart busters that 1600 to 1620 to 1700, that's a broad range for HDFC Bank. And even after this last couple of days of a slight bit of volatility, and the stock has made a comeback and it's now inching towards the 1700 breakout, which I believe could be a very strong breakout for HDFC Bank. What is also interesting is that relative performance. So now in the last few days, ICICI Bank, IndusInd Bank, Axis Bank, the ones which were also trying to make a strong comeback, these stocks have started to underperform, but HDFC Bank has continued to outperform. I think that's a very strong quality for stock prices. So when we see a relative strength, coming into a larger cap name as compared to the other peers, then I believe then the momentum as well as the trading volumes, they generally shift to those large cap stocks which outperform. So I think that could also be advantage HDFC Bank. 1700, as I said, is a breakout point. 1620 as a major support for HDFC Bank.
Sandip, there's a lot of consensus out there for HDFC Bank that FIIs will make a comeback in 24 and that money is going to find sizable portion of it coming to HDFC Bank. But given that ICICI Bank continues to be the erstwhile favorite as well, do you think it makes sense to ease off a little bit from ICICI Bank, profit take a little bit there and deploy that money into HDFC Bank?
So I think there's very little to distinguish many of these larger private sector banks now. And so to that extent, arguing that one will trade at a significant premium to the other might be a fallacious assumption. So I think we have to take a call based on valuation. So today, HDFC Bank trades at some premium to ICICI Bank. So there's no reason for someone who owns ICICI to actually shift to HDFC.
Point taken. So that's about some of these large private banking names. But other than that, yes, metals is one space which is doing okay. Reliance is the other one, which is at 2561, and Power Grid is high by around 2%. Just taking stock of which are the other sector performers today. So all the sectors are in the green. It's only autos which are lagging quite a bit. So Maruti, M&M, TVS Motors, all of these names are down, while Sona Comstar is the only one which is holding with a gain of around 5%. What's your view on space, Sandip? Two-wheeler, four-wheeler, any name that you like within the basket or even the ancillaries?
So auto stocks had a good run-up in the run-up to Diwali and the holiday season. Now, for them to move up significantly further, we need to see demand sustain in the post-festival period. And that's something we need to watch out for. So I would think that in the current context of the overall market, the space is fairly valued with upsides still in M&M, even Tata Motors based on how they perform.
Sandip, just wondering what's the prospect now of realty? It's been the best performing index and all the constituents have, done, which is public knowledge, had stupendous returns even this year and the year before that as well. But you think now there will be a tactical shift perhaps out of realty to the other sectors, or you think realty will continue to hold out the way it has all through the year?
The realty, if you see in the context of the overall market, is still a very small sector. If you combine the market cap of all the large realty companies, it will still be very low in the context of what the overall real estate industry contributes to the economy. The issue with these companies is they have big cycles and the drawdowns and upsides in the cycles are very high. So right now the upcycle is on. I think it should still sustain for some more time, but valuations have clearly run ahead of what are fair valuation as for most of the sectors. So people need to be patient, wait for correction and then buy.
Correction and then buy, but look at those intraday recovery on the mid cap and the small cap indices. It's a 4% intraday recovery, 560 points on small cap, mid cap as well. There was a recovery of almost 1400 points on an intraday basis, and even Bank Nifty, almost 1000-point intraday move is what we are witnessing. So most of the losses that were there in the sense of what we saw yesterday, it's getting recovered at least partially today, and the Bank Nifty now at the highest point of the trading session, a 400-point gain, as I pointed out, 900 points off the day's low. So I mean, Kunal, whoever would have bought at the start of the trading session would have clearly made big money, but what about from here on? Can somebody take fresh positions now as well? Because I'm guessing a large part of this is also on account of weekly options expiry as well.
Yeah, it could be. I think yesterday was Bank Nifty expiry, today is Nifty
Nifty
weekly expiry, and next week I think we'll be looking at the monthly expiry for both the indices together on Thursday. But I think in terms of current trades from current levels, I would still go with more larger cap names at current levels. So, we'll need to see whether the market is adjusting towards a higher degree of volatility. Yesterday the India VIX was up, the India VIX is down marginally, but we need to see whether this is a temporary glitch in the market where the India VIX is adjusting based on the moods of the indices, or whether there is a decisive trend in the making. But I think once we break past about say 48,000 for the Bank Nifty and 21,300, 350 odd for the Nifty, that could be a stronger conviction level to try and buy both these indices.
So right now what to do? Just book some of the profits?
Yeah, book some of the profits, but shift to large cap stocks, large cap banking names, HDFC Bank, Reliance Industries, something which you've been recommending earlier.
Okay, on that note, let's take a very quick break. Sandip, we'll let you go as well. Thanks as always for taking the time out and joining in. Solid recovery in store for us. Let's see how the last half an hour pans out after this very quick break.